Well, hello again. My name is Warwick Powell, and welcome to another episode of TIO Talks. With me today is Professor Liang. Yen is a professor of economics at Willamette University in the United States. How are you, Yen?
I'm doing very well. How are you?
Fantastic. I'm okay. I'm glad to have you back again. Let's dive in. I want to pick your brains a little bit. We're heading in towards the latter half of August, so we've got clear picture of the last 6 to 7 months now of the global economic situation, and more particularly the situation in China. Could you just give us a bit of a snapshot, if you will, of what the first half has given us, what have been the challenges, the interesting highlights, and some of the key pointers that might help us better understand the unfolding world that we are currently in?
Yeah, great to be with you. So I think I would say that the first half of the first half of this year, China's economy holds up very well, very steady and robust growth of 5.3% with real GDP growth for the first half. So this is despite all these headwinds coming from the United States trade war, and also I think increasing complex, international environment when it comes to regional wars and other sort of interesting geopolitical realignments. So I think domestically, as you can tell from macro data, so the real retail sales growth was quite healthy in the first half of this year. I believe it's about 5% for the retail sales of goods. And of course, online sales also, register even higher growth. Industrial production also grew at a very healthy pace at 6.3% for the first half of the year. And you have also fixed asset investments that despite, the real estate sector continues to be a drag, the overall investments in the economy looks quite healthy, 2.8% growth rate. So I think when it comes to in terms of the cyclical changes in China, I think again the economy was quite stable and it was steady, and trade, of course, the first 7 months we have seen really strong export growth, about 7%. And contributed to, I think, at least for the first half of the year, it contributed to 1.7 percentage points to GDP growth, which is about 30%. So, again, that is a quite remarkable, I think, achievements, right, despite all these, the US trade war. So I think, from a cyclical point of view, I think the economy holds up very well. And when it comes to structural aspect, again, we are seeing continuous upgrading of the industrial structure, right? You're seeing, DeepSeek launch in February. You're seeing that AI technologies is being quickly applied in various sectors, and you're seeing, humanoid robots that are growing in both in terms of technologies, but also, I think, more importantly, in terms of the applications. You're seeing the so-called new trail economy has now reached 18% of GDP, from almost nothing just a few years back. And China now also becomes the largest auto, exporters for the second year in a row, overtaking Japan. So we're seeing a lot of structural, upgrading in the economy when it comes to technological intensivity of the economy and it comes to the export structure. So all of this is to say that, both from a cyclical and from a structural point of view, I think the economy is quite healthy. It's growing at a pace that it's comfortable, and also, with the structural improvements. When it comes to some sort of the weak points, I would say, the property sector. I was hoping to see a faster kind of recovery and bottoming out of the real estate sector. But I think the most recent data show that the real estate sector investment has gone down by 12% in July, which is again an acceleration in terms of decline, right, from the first 5 months or the first 6 months. So, and when you look at the housing prices, they continue to fall. Albeit depends on existing house or the new houses decline, have a different kind of speed. And then when you look at, for example, the households, according to the PBOC survey, you're still seeing many people say they wanted to save. Close to, I think, 20 some percent of the surveyees that say, yes, we wanted to consume more. But 60 some percent still say we want to save more. And then the rest to say, we want to invest more. So I think the confidence from the household's perspective can still be strengthened. Although I would say the recent rally of the stock market, and it seems to be a quite sustained momentum from where we're sitting now, I think some of these factors will be helpful. And second half of the year, of course, things would stabilize in some fronts. For example, the trade truce, the tariff truce will continue on for another 3 months, but we know the front loading will, pretty much dissipate. So that could add a little bit, interesting dynamics on the trade front. But overall, I think, the economy looks healthy, and I think the second half could slow down a little bit from the 5.3%. But I think still overall, the goal of 5%, around 5% growth target is still quite within the reach, bar from any major changes that, we can't foresee at this point.
All right. Now, I want to drill in on probably every dimension of that. So perhaps we can kick off with the adjustments in fiscal policy. Many of those were foreshadowed some time ago in anticipation of particularly exogenous circumstances, the headwinds coming particularly from the Trump tariffs. And it's also wrapped up, I guess, in an effort to continue to boost domestic demand. Perhaps you could just fill us in a little bit on what's happening on the fiscal policy front, and also particularly in the context of an unfolding debate that seems quite interesting in China about whether or not the fiscal deficit at a central government level should be extended or not going forward.
Yeah, so I think, I just gave a sort of a broad picture about the Chinese economy. But when it comes to underlying, driving forces, I think definitely the government is playing a very active role in supporting the economy. So the fiscal, tool, I think is a very potent, policy tool for the government. So you're absolutely right. When we look at the data in the first, 7 months, we're seeing fiscal expansion of about 3.4% year on year. And most of that come actually from the central government. The central government fiscal spending, I think that has expanded about 8%-ish, compared to local government is a little bit over 2%. So I think, this is the right approach, right? You want the central government to open up the purse, the fiscal purse, because they have the financing power to do so. And also, the economy is still needs some kind of support. And I could talk about, I think some of the people always argue that fiscal policy is always just a cyclical tool, right? So when the economy is, slowing down, you use fiscal stimulus. But then when the economy is doing well, then, the fiscal policy can take a back seat. I don't think that is really the right approach. I think the government, the public sector, right, in general, it's always an integral, part of the broader economy. I think in China, a market economy with Chinese socialism characteristics, the public sector and the private sector really have a very important symbiotic relationship. So I don't think the fiscal, policy or the government is an afterthought, right? That you build a market and then you put the government in. That is not the approach China has been taking. And the Chinese approach is always having both, right, as important drivers of the economy. And I think that model has proven very successful. The government has been building infrastructures, have been, building the educational system. So both the hardware and the software, and with the long-term planning and strategic vision, I think that is very much the backbone, right, of the China successful model. So giving your question, the NPC, the National People's Congress, back in March, has already rolled out their fiscal package, a plan, right? The plan is to raise the deficit spending from the previous 3% of GDP to now 4% to GDP, right? And the thinking at that time was that we're going to have this, trade war, and the economy rolling out of the, COVID, and with the real estate, downturn, we need more fiscal, support for the economy. And I think that is it's a sensible understanding of the economic situation, and I think it's a sensible use of the tool. And there's also, more quota for both the central government to issue long-dated, special bonds, but also allow the local governments to issue more bonds to swap out some of their hidden debt, by the local government funding vehicles. And so I think again, all these fiscal policies are sensible, are they're supportive for the economy. Um, and there was always, again, people quibble that fiscal policy can only get you so far to counter the cyclical headwinds, but it's what China needs is a structural transformation. But I think that is very much a misunderstanding of what fiscal policy is about and how China is able to use its fiscal policy. So in my view, you want to transform the economy when it comes to, let's say, industrial upgrading, you need public investments, right? We know that China is very much well known, right, for its EV industry now. But without the government building the EV charging station, right, 4 million of them, China's the EV sector is not going to grow as much as is now, right? Same with Internet of Things. Without the Chinese government building all the 5G stations, the Internet of Things will not be developed as quickly as it is now. So it's very important to know that fiscal policy is helpful for the kind of structural transformation. Now, the argument is, well, China doesn't need a lot more public investments. What China needs is to boost consumption, right? Well, even if that view is correct, and I could argue, there are many misunderstandings again with that view that somehow you can boost the consumption without driving up investment and production and productivity and so on and so forth. But even if the need for the economy is to boost consumption, you still need the government, right, to play a critical role by providing again, stimulus to the economy to allow more jobs, more income to grow, and to provide a social safety net, right, to take away the kinds of precautionary mindsets of the people. So whether or not it's about cyclical stimulus, whether it's about structural transformation of the economy, we do need the government, right, to flex its fiscal muscles to help the economy.
So it seems that fiscal policy has intervened on three core dimensions. One is foundational economic infrastructure. The second one is actually through a series of subsidies targeting particular kinds of product types. And the third one, as you just touched upon, is the idea of transforming the social safety net, particularly with some payments into the education system, childcare, and things like that. Perhaps you could just drill into each of those three elements a little bit. And I want you to do this, if you don't mind, in the context of that broader issue of the relationship between investment demand growth together with growing the actual nominal amount of consumption demand as opposed to consumption as a percentage of GDP.
Right. Well, yes, you're right. I think the three big buckets would be, where the fiscal spending is allocated right in. So I think, when it comes to public investments in infrastructure, I think, we could talk about all these different sectors that are emerging in China, going from high-speed rail to EVs to AI to all of these, right? You need the public infrastructure in all of these emerging and, growing sectors. I don't think we need to spend a lot more time talking about, sort of how China has been, investing in infrastructure. I mean, suffice to say, China has built, the most extensive highway system to allow for the high-speed rail. And it's not, of course, just for passenger transportation, but it really helped to build that integrated supply chain. So you could have a city that has all these different, ingredients that you need to supply to a particular industry, right? And then you can go from city to city. You can hop on these fast speed train. You can, facilitate the kind of logistic transportation. So there are many, many important, I think, usages of that very extensive railway network. 5G stations, what I was talking about, that support the Internet of Things, and of course, power generation, utility, right? That is all the more important to power AI and many other, advanced manufacturing. So I think the public investment infrastructure, of course, it's very important. It goes without saying. Now, the second bucket, which comes to the specific, government spending on supporting industries, be it subsidies or R&D supports or local governments, right, helping the businesses to settle and to build their supply chain within the city. All of these are very important. And I would say, sometimes especially in the Western media or the Western academics, they tend to overblown, the second bucket, right? To say that China gives so much subsidies and all of that, as if, you can subsidy with your way to technological, development. I think, some subsidies definitely are important, both to the enterprises, but also to the households. But that is just part of the broader, industrial strategies, industrial policies. So that's the second bucket. And then the third bucket, of course, is when it comes to social spending. And again, I think it's very important to know that even though, right, by some metrics, China's social spending may not be as much as the OECD's on average, but I think there's still a lot of I would say hidden, right, transfer in kind to the households that are not necessarily captured by some of the stats. Take service as example, right? If you look at China's retail sales, they actually larger than China's consumption amounts. So that is very interesting. So you'll be like, so wait, the Chinese people only buy retail of goods. They're only buying refrigerators or cars and all that. They don't need to send their kids to schools, right? They don't pay for medical bills. I think that's because a lot of services are simply not counted, right, as a private consumption. So a lot of that, again, comes from the government putting in place, subsidize the meals, subsidize healthcare, subsidize education, provide some services, in kind transfers. So I think that is also very important. So when people only look at household consumption, they don't look at the public consumption. I think that again it's really misinformed. Um, and then you brought up this question about investment versus consumption. So I would say, for one, as we just mentioned, a lot of the consumption may not be appropriately accounted for, and that's why you see, China's consumption, to GDP ratio is so low, right? Less than 40% when it comes to household consumption to GDP ratio. But if we really take into account all these transfers in kind and so on and so forth, I think that number would be much bigger, right? It's actually closer to the OECD average, especially again if you look at disposable income to GDP ratio, China is about 60% to GDP, and so that is pretty much in line with many of the European economies and Asian economies. So it's not sort of this whole idea that Chinese households don't have the money, they don't have the income. They have been subsidizing the industrial sector, and so they're deprived, and therefore they cannot consume. Again, I think that is very much misconceived about the Chinese economy. Now, I would say though, given the same kind of statistical standards, right, we are seeing an increasing consumption to GDP ratio up until the COVID era. So from 2010, early 2010s, all the way to 2019, 2020, we're seeing the consumption to GDP ratio has been growing. Again, the consumption is undercounted, right? But the trend has been it's growing up until around the COVID era, so 2020, right? And then you start to see that consumption GDP ratio level off and declined by a bit. And now I think, it starts to see the new trend that it's growing. I think one of the reasons, again, is because of the COVID scoring effect, right? And also the real estate sector, right? Start with COVID, right? That's 3 years of lockdown. People are drawing on their prior savings. And so that really give them extra incentives to save for precautionary purposes, right? So for this year, we're seeing, I had the number somewhere, I think by the end of July this year, when you look at the PBOC's balance sheets, the households deposits now it's about $23 trillion. So in dollar terms is 23 trillion. In yuan is 162 trillion. So that's a whole 9 trillion yuan increase in just the first 7 months. And it's similar with last year, which is an 18 trillion increase in the households deposits. So we are seeing, households want to save more, right? And part of the reason, again, is because of real estate downturn, right? That the Chinese people typically save a lot to pay for down payments, right? It's usually, in the Western world, you pay 20%. China easily more than half, 60%, 70%, 80%, right? So when the household sectors, when the households, right, when people feel that this is not the right time to enter the housing market yet because they expect the price to continue to either go down or they're going to stall for a while, they may not want to purchase the houses, and therefore they're accumulating deposits in their bank account. So I think given those two reasons, right, COVID and the real estate sector situations, I think it makes sense, right, for the households to ramp up their savings instead of consume more. So the question is, this is going to be temporary or this is going to be structural, right? So I think really that would depend on how this wealth effect is going to play out. As I just mentioned, the stock market now just surpassed 100 trillion mark, and this year the stock market has gained 11%. We already see some signs that the households are pulling the deposits away from the banks and invest in the stock market and also wealth management products at this point. Still not consumption just yet, but we are seeing, some positive wealth effect that could help the households to stimulate their consumption. Not to mention, there's also some of the specific trading programs and subsidies for services and so on and so forth. The most recent, policy is to subsidize consumer loans, right? When the interest payments, that would get some subsidized 1 percentage points by the government. But I think at the end of the day, right, how do you stimulate consumption? You still need job creation. You still need income. And so where does that come from? It has to come from the so-called autonomous demand, which is a demand that does not rely on income, right? Because if consumption depends on income and income depends on some other variables, then you cannot have consumption ahead of this income generation. You got to have some mechanisms, some other autonomous demand that will drive up your income, and then income will translate into consumption and saving, right? So where does those where are those what are those autonomous demand? Well, there is investment demand that does not depend on current income, so investment needs to go up. Investment comes with more production, of course. So the investment demand is what you can drive production and jobs. You have trade, right? Exports, foreign demand could be some of these autonomous demand that does not rely on the income. Government spending, that is another demand that does not depend on the current income. So again, this whole idea that we need to increase the consumption share of GDP, I think is really the wrong question to start, right? You can't increase your consumption to GDP ratio if, let's say, consumption go up by 1% and GDP grows at 0%, right? There you see a consumption share goes up. But is that what people want? Right? Is that really what will be helpful for the economy? The answer is, of course not, right? So to be thinking about, we need to cut investment, cut government spending so that households can increase the consumption to GDP ratio. Again, I don't think this is really the way to run an economy, right? That's not desirable. That is not healthy. That is not how you really have sustained growth in consumption.
One of the fascinating issues of late has been this focus on what's called involution competition, or Nejian, and part of the evidence of that is the persistence of negligible inflation or deflation in some areas. That is often used in the Western discourse as some line of attack on the structure of the Chinese economy. Perhaps you could just unpack that issue of deflation, together with the concerns around the competitive environment and what that begins to look like as these production systems continue unfolding and as the Chinese economy continues to evolve in the post-COVID era.
Yeah. Well, I think, that is a very interesting question, definitely a complex one. So first of all, I think, again, if you buy into the Western, discourse, I think the whole idea of the China is experiencing deflation, again, is somewhat overblown, right? Especially when it comes to the disastrous sort of consequence of that. The reason is because when you think about, the historical precedents, people always cite the Great Depression, right? But what happened in Great Depression is a decline in demand, right? It's a shrinkage of the effective demand. So you got if you think about supply and demand, right, that's a leftward shift of the demand curve. What happened in China today is not a decline in demand. What in China happening right now is a tremendous technological breakthroughs, very much expansion of productivity growth. And so you got a supply that is growing at a faster pace than demand. So it's not a decline in demand per se, but it's a very fast growth in terms of the supply. So there are two questions here, right? One is, does it really matter, right? I think it matters in some degree when it comes to this whole idea of involution, because involution means that this competition comes primarily from price cutting. And so that it may not be desirable. Why? Because this will cut into the business's bottom line. So you're looking at the industrial, profits that has been declining in China. If you look at, the first 7 months, I think the industrial profits has declined by, I think it's 1.8%. So that it's not a sustainable business model, right? Businesses do want to make profits. So price cutting, this kind of vicious kind of competition is not desirable. So there's definitely, reasons to rein in that kind of behaviors. And there's also reason to rein in certain behaviors where the local governments are subsidizing certain local champions, right? Even they're loss making in and year out. Now, again, I wanted to caution, where do we see this kinds of excess capacity, right? The Western media, of course, is say, oh, you produce too much EVs and so on and so forth. Well, those are actually not the sectors where there are real sort of so-called overcapacity, right? Because there's a huge market, right, still for the EVs, right? As a matter of fact, if you look at China's data now, EV accounts for over half of the total auto sales. And China also are able to export, EVs to many of the global South countries and Europeans, right? And it's, not pure EVs, but some of the plug-in hybrids. Those have been seeing really rapid growth in terms of exports. So those are actually not the sector that had this problem, right? The real sectors that have problem are more construction related, real estate related, like cement or steel. Those are the sectors that experience some kinds of lagging demand compared to the supply, right? So I think in some set of specific cases, right, there are cases to be made that we want to rein in some of these so-called involution to promote competition based on technological innovations, by quality services and so on and so forth, instead of price cutting. Okay. At the same time, again, I think it's not a problem when you're seeing prices decline because there are better technologies, there are better productive capacity, there's more scale effect, right? When you can build one car, the cost obviously is high, but if you can build 1,000 cars, the cost is going to go down by unit. And I think, as you mentioned many times, does help to price in, right, the consumers. And so you can generate more demand that way. Okay. So I think that are the 2 points that I think are important to understand, right? One is that China is not seeing a decline in demand. It's just with the technological innovations, the very fast pace of scale effect, the expansion of production, that we are seeing, the supply is growing faster. And so that helped to lower the prices. And so some of these price reduction reflects better technology, right? Better product cycles, better innovations, better cost cutting efficiency with the in-house supply chain. And so that kind of price reduction is actually good for the economy. It helps to price in consumers. Now, on the other hand, there are certain sectors that might see some unhealthy competition. And I think those can be reined in. And there are sectors that, in a way, don't catch up with the new transformation of the economy, right? The real estate sector, for example, and related construction businesses. So some of those, need to be readjusted. But I think this overall argument about China is experiencing overcapacity, deflation, and that's going to cause economic collapse. I think that, it's definitely, it's completely misconstrued reality, right, of what China is experiencing today. Again, I think for the Western narrative, right, either they really don't understand, right, what exactly behind the price decline in China. They're only taking the Western model and kind of plug it into, trying to see China's reality from their lens, or they have their specific agenda, right? That we clearly see some of the, Western academia, especially when it comes to some of the government related or government's adjacent kind of think tank, right? They want China to rein in their capacity. Why? Because they are less competitive than China, right? They're not able to build their market share in some of the emerging industries. And so, there's only overcapacity if the capacity doesn't come from them. So I think, we really need to differentiate that. And I'm really hoping the Chinese policymakers would not, take this overblown sort of overcapacity story too seriously. I am a little bit concerned about July's data. When you look at the investments in infrastructure, for example, it has declined. So again, I think we need to understand the investment is a driver of the economy, right? We need to understand that structural upgrading and productivity growth is the long-term solution to sustain consumption and sustained domestic demand. So that need to be continued to be supported rather than to be reined in.
Well, this turns us nicely to the future, and the Chinese government is now preparing the 15th five-year plan. Um, Perhaps you could give us a little bit of a heads up on what are the big issues that the 15th five-year plan is likely to be concerning itself on, and what's the sort of general thinking, I guess, around what the Chinese economy is going to begin to look like as an unfolding economic or organic system over the next 5-year period.
Right. Well, so I think still the productive side, right, will be an emphasis of the 4-year plan. The 5-year plan. Um, I think there's an economist, right, Dan Wang, who has just published a book. He likened the Chinese economy as an engineer economy, right? So it is led by sort of engineering head, right? That production is still the backbone of the economy, and I think that is a correct characterization of the Chinese policymakers. Although I would have some quibbles about his idea that about social engineering and how the Chinese government has failed in some of the aspects, but I'm not going to go into that. We could have a separate some discussion about the so-called social engineering, but I think he's right that in Chinese policies mind, making things are important, right? Manufacturing capacity, technological innovations, those are the backbone of the economy, as opposed to financial engineering, as opposed to financialized economy. So I think to promote technological innovations are still going to be a central feature of this 5-year plan. And the sectors like AI, humanoid robots, biotechnologies, renewable energies, so on and so forth. I think those will continue to attract a lot of attention, a lot of policy support, and a lot of efforts, right? This whole society mobilization, money, talents will be still allocated to those sectors. Because again, this is the way that China is able to build its national productive capacity. It is what will drive the productivity growth, and this is what will allow China to continue to grow its economy. I think it's very interesting. Just a few years back, there's a lot of discussions about China's in this middle income trap, right? And so China heard the attention to that, and China started to really build its productivity growth. And now you don't hear that anymore. And now all of a sudden, everyone is worried about China's overcapacity. So it's very interesting that when China is succeeding in doing something, then the narrative is, well, China got it wrong. But in any case, I think that the supply side, the upgrading, the continued technological development will be still a central focus of the next 5-year plan. What will be added to it, again, I think, is some emphasis on the demand side. And this demand side, of course, consumption demand will probably loom large again in this sort of document. I think in some ways it is a desirable thing, right? Because as China, almost entered this high income rank, it is, I think, desirable to provide real benefits to Chinese people, meaning that they would have more consumption capacity, they will have better goods and services, they would enhance their living standards. But again, I think the key question here is, how do you really boost consumption? So in the short term, of course, the confidence is the key, right? How you really instill confidence to the households, the people, right? Not to worry too much about things like COVID or the real estate sector or jobs and so on and so forth. So I think the confidence needs to be boosted, and there are ways to do that. And the medium long term, of course, there are other things that the government can definitely do, such as reform the hukou system, right, to allow more, the migrant workers to have higher income and have better social benefits, so then they are be more willing to spend. There's often times, again, this idea of better social welfare system, pensions or healthcare or unemployment benefits, no doubt, right? All of these can happen. But again, the point here is not to somehow believing higher consumption must be at the expense of production side, right? The investments or production. Again, I think if you don't have jobs, you don't have investment, you don't have production, you don't have jobs, you don't have healthy income growth, then none of these other things would matter, right? As far as the long-term sustainable consumption is concerned. So you could have all these so-called structural sort of reform as much as you want, but if you're trying to cut investment, trying to cut production, this will get you nowhere. And so I think that it's very important. I'm not against boosting consumption demand, even though I do believe China consumption has been healthy in terms of the growth, right? In the past 3-4 decades, average 8-9% a year, double, triple the world average. So to say that Chinese don't have consumption, I think that is completely, again, a misconstruction of the reality. The question is, can we continue to boost consumption at a hard, faster speed? And again, I think yes, but we should not play the story, that the Chinese consumption market is collapsing, it is too low as a percent of GDP. I think all of these are not really making any sense.
People might want to remember too that in the 1950s, consumption as a percentage of GDP was almost 70%. And I think it's probably fair to say that in the 1950s, people were a lot worse off than they are today. I guess this brings me from the sort of big long-term stuff to the next few months at least. We've got some headwinds and some uncertainties, particularly in relation to the US-China trade discussions and what that might begin to look like. We've got another 80 days or so of this particular discussion window. Perhaps we could wrap up this discussion with some thoughts from you on where things are at in terms of that bilateral relationship. What are some of the other issues, both headwinds and tailwinds, that are going to impact the Chinese economy in the context of the global economic development contours over the rest of this 2025 year?
Yeah. Well, I think as far as the next few months are concerned, I think there's still uncertainty, right? Especially from the external demand side, largely because again we're seeing this is 90-day truce, and so things could still change right near the end of the year. And of course, the Fed is contemplating, changing interest rates and all of that. So that would have some ramifications when it comes to asset reallocations, the stock market performances, and other aspects of the economy. But as far as the trade is concerned, I think you and I both know that the U.S. is not it's not the king of the world when it comes to trade, right? When you look at so far, starting the beginning of the year, the U.S. accounts for about 14.6% of China's exports. Now the ratio has down to about 11-12%. So the U.S. is becoming less and less significant, right? Even though China's trade is still growing, it's still trading much more with ASEAN countries, European, Latin American countries, Africa, and so on and so forth. So net, we're still seeing the momentum from China's exports are growing. That said, I think because the first half of the year, because of these fear of tariffs, there are a lot of front loading. So naturally, the second half of the year, we might not see as much of exports because of that front loading effect, right? So we're likely to see that the external demand not as robust as the first half. There are other potential sort of the headwinds from domestic economy. So I think again, external environment, it may not be as helpful as it could have been like the first half, but it's not going to be a huge drag. Whatever the United States is doing, they're not an important trading partner, not as much as they would like us to believe to be. But then domestically, I think for one is the trading programs. It may run out some of the steam. May not be as strong as the first half. In the first half of the year, it really helped to boost sales of, home appliances, electronic product, and so on and so forth. You see double digits, over 20% growth in some of these, consumer goods. And so that's really helpful. 1.3 trillion yuan increase in sales when you only have, $150 billion program, yuan program. So that is a very, very good run of that trading program. So come the second half, when people are already front loading, whatever the machine, whatever the home appliances they are buying, that effectiveness may fade off a little bit. So that means we need to come up with new kinds of direct stimulus on, service, for example, which I think the government has been doing, right? As I just mentioned earlier, the PBOC has come up with, interest subsidies on services for the consumers. They're also having interest subsidies for businesses, service sectors businesses. So I think that's as far as the direct consumption stimulus is concerned. I think that is the right approach. Now you pivot from goods to services. Fiscal spending continue to be, I think, to be important, right? The fiscal budget has been set in place that cannot be changed, but there could be faster and more effective implementation, right, of the bond issuance and also spending, especially when it comes to infrastructure investment. Like I said, I see the July data has gone down a bit from the first half, so that can still have room to improve on. And the last piece, of course, is the real estate sector. So if we continue to see the deceleration of the real estate sector investments, and also the housing market, if we continue to see declining in prices, that would be a headwind for the economy. So what I'm hoping is the second half we're seeing more stabilization of the property sector, meaning that local government, the central government, they could do more to destocking in the housing inventory, and also accelerate the building and the completion of some of these unfinished apartments and so on and so forth. And the stock market, I think, will continue to hold up well. From what we are seeing now, it's a pretty strong rally with relatively low volatility compared to October last year. So that's a good sign that this stock market rally is supported by both abundant liquidity from both retail and also institutional investors, and also from very healthy outlook on AI, for example, which is a very interesting contrast from the United States, right? The MIT has published this report and says in the US, 95% of the enterprises fail to capitalize on their AI investments. The return on their AI investments is zero. Compared to China, right? DeepSeek just launched the version 3.1, and it's a much better model when it comes to parameters and so on and so forth. And it is very cost effective. And so it can be much better integrated into the rest of the economy. So I think, China's tech story is much less, bubble-like in the US as in the US, right? So I think that would help, again, to build momentum in both the real sector and also in the financial market, the financial sector. So you also hear a lot of people were saying, oh, look at the China's bank lending. It has declined, by 5 billion in this July. And so that's a balance sheet recession, that every few months or every few years, you keep hearing that coming up, for the China story. But I think, again, if you look at the total social financing, it has been growing, and the decline in the bank loans, it's more than offset by the equity financing. So I think, again, the new RMB loan, I think, declined by like 69, billion compared to last year, from the first 7 months this year, compared to the same period last year. But again, the equity financing has gone up by 73 billion. So it's more than offset than the decline in the loans. So it's not like, companies are refrained from borrowing. They're worried about their balance sheets. They are not expanding, and households and so on and so forth. I think they're shifting to a different way of financing. And so again, that is to capitalize on the booming stock market. And so again, I don't think we should buy into that kind of story. But I think fiscal support should continue to come along with some kind of monetary but more targeted, I think, liquidity support. I think that would be helpful, like the targeted support for service sector, right? And also for stock markets and housing market, I think those would be helpful. And again, more support for and targeted support for the real estate sector adjustments. I think that would be helpful. But again, it's really remarkable when you think about China is able to adjust the real estate sector, right, from previous 25% real estate investment to GDP to now 15%. That's a whole 10 percentage points of GDP. But China did not enter a recession. China grew at 5%. And I think that really defy all these, all these collapse, narratives about, China's economy.
Well, Professor Yan Liang, thank you very much for giving us an update on where China's economy is at for the last 7 months, as well as the outlook going forward. My takeaway from this is that the chicken littles of the world of collapse are probably going to remain disappointed. We have a pretty steady as she goes approach, both from government and also from the private sector in China. There's certainly some headwinds, as there always are in a complex
Absolutely.
world, but there's also certainly some tailwinds for us to keep a close eye on. So once again, thanks for coming on and giving us that update.
Well, thank you for having me. Thank you all thank you so much for all the great questions. And yeah, I think it's always good to talk about, the Chinese economy and really have a cool head analysis and looking at the facts and realities instead of, listening to some of this very much misconstrued, right, narratives.
Well, it's nice for a change. So thank you.
Thank you.
If you liked that video, please like, comment, and subscribe. It really helps the channel. If you'd like to see more from TIO, check out the Substack link. Or if you'd like to see more from me, check out my Substack in the description.